So December 2022, and question number 1C. The question says that Barb Limited places orders for one of the components used in its manufacturing process. The price of the component has been fluctuating, thus affecting the production of the final product and hence eroding market confidence of the company's clients. The company's accountant has presented the following quantity ranges and respective price of the component, which he believes would result in a cost saving to the company. So we have the range, the price per unit. Then we are told that the company's annual demand is 60,000. The ordering cost per order is 50,000. The holding cost is 20% of the purchase price. The company practices continuous stock taking throughout the year. Now advise the company on the quantity range that would yield the highest cost savings. The highest cost savings. Okay. So in this case, the question is on what we call multiple discounts. Is on what we call multiple discounts. Multiple discounts. And I told you with the multiple discounts, we normally have the several columns. The first column is the quantity range or the purchase range. The purchase range. Like now, the first one is 1 to 6,000. 6,000. Then you bring the price. The price is 420. Now here, they have not given us discount as a percentage, but they have given us the prices that have been reduced. So we are not computing the new price like we did in the other question. Then you get what we call the computed EOQ. The computed EOQ. And because we had written the formula earlier, I just want to substitute straight. Where we say it is 2 times the annual demand. The annual demand we are told is 60,000. 60,000 times the ordering cost, which we are told is 50,000. You divide this by CH. C is the purchase cost, and H or I is the holding costs percentage, 20%, 0.2. Then this one, we shall get the percentage of it. So work that out and tell me what is the answer. Yes, I can see. At least I have one from Eric. Let me get a second opinion. Yeah, so we agree 84.52. We can make it 84.52. 84.52. Now with that, we shall make our comment. So we said you look at this value where it is in regard to this range. So this one is above. So if it is above, what we do, we ignore. What we do, we ignore. What we do, we ignore. Yeah. So we go to the next range. Elvis, how are you?
I'm fine.
Good, karibu sana. So the next range is 6,001 to 10,000. And the price is 380. So we need to get here do the square root. It is going to be 2 times 60,000 times 50,000. You now divide by 380 times 0.2. Oh, we already have the next one. A second opinion. Okay, so we can make it 88, 85. Or we normally try to round up. We can round up 86 because if you do the 5, they will not be complete. But even if you work with 5, still okay. Now this one, it is within. So if it is within, you use Q as 8886. So the next is 10,000 to 14,000. The price is 340. So this is 2 times 60,000 times 50,000. We have 340 times 0.2. Can see the first one. Someone else to give us the value. So that one is 93.94. So now that is below. So you use Q as 10,001. Okay. So the next range is 14,000 to 18,000. And the price is 310. So this will be two. We have 310. I need another one. 98.37 or 98.38. Okay. So this one is below, and therefore we use Q as 14,001. The last one is 18,000 and above. 260. 9837. Am I still the old one? Okay. Ten seven 41. So this one is also below. And if it is below, we are going to use Q as 18001. 18001. Okay. So we have the price here. We can bring the price. Then we bring the order size. And then we compute the total costs. Let me have here. So the first one we found it to be above, so that one we ignored. So let me first of all design so that I'm able to know up to where. So hiyo ndio nataka kucapture ile 8886, then 10001, 14001, 18001. The price is 260 here. This other one is 310. This other one is 340. Yeah. So the total costs, we said it is the annual demand 60. You multiply by the price. The price is 380. Plus, you take the total demand, you divide by the order size. You multiply by the cost per order, 50,000. Plus, you take the order size, you divide by 2, you multiply by the price, you multiply by the cost per order. Sorry, not the cost per order, the opportunity cost percentage. Multiply by the opportunity cost percentage. So work out that and get your answer. So this one will be 60 times 340 plus 60,000. I divide by 10,001 times 50,000 plus 10,001 times 340 60,000 times 310 plus 60,000 divided by 14,001 times 50,000 plus 14,001 divided by 2 times 310. And then 60,000 times 260 plus 60,000 divided by the order size times 50,000 plus 18,001 divided by 2 times 260 times 0.2. So what I would like you to do is to solve those computations on your own. Then you will tell me the price that is giving the lowest cost. You'll tell me the price that is giving us the lowest cost. So I give you like 10 minutes, no, 10 minutes are very many. 5 minutes.
Pia akasema hana kazi na tena imebaki na 20. Yeah, 20 pekee. Na nini? Kuna hii kamande ya ile siku hakuna kitu, ni beans na chai. Unakula nini?
Aya, now tell me which one? Which price is giving you the lowest? So I can see the answer is 260. So are we in agreement? That is from Elvis. Quinta and Eric, are we in agreement? Eric, Quinta, I want to know whether we are in agreement. Yeah, so we are in agreement. That's what Quinta is saying. So Eric, I hope you're also in agreement with that. Aye. So if we are in agreement, if you came across a similar question, I believe you'll be able to handle that. I believe you can be able to solve it. So I want us now to look for another question that we can solve. Let us now go to August 2024. August 2024, question 2B. Let's get there. So in this August 2024, question 2B, the question says, Maziwa Limited is a small company that specializes in buying and selling of powdered milk. The milk tins are packaged in boxes. The company started its operations on February 2024 with a capital of 4 million. During the past period of 6 months, the following transactions have occurred. So we have the purchases and we have the sales. So you are told to get the, or rather additional information is the closing inventory counted on that 1st of July 2024 was 500 boxes. General operating expenses paid during the period amounted to 23,000. The company uses RIFO method of inventory valuation. Required, prepare a store's ledger account and then an income account. So this one now is on stock valuation. That is on stock valuation. So in stock valuation, we draw something we call the store's ledger account. The store's ledger account. And you remember when we discussed it, we said we have three methods that are used. The first is FIFO, the next is LIFO, the third one is weighted average. So we are going to use LIFO. That's what this examiner wants us to do. So in this case, we have to design the question this way. Design it this way. We have the month here. Or we have the month. Then I'm just wondering whether I put two columns or just one. Let me call it date. Instead of having two, let me call it date instead of creating two columns. Then on the second line here, we have units. We have unit costs and amount. We have units, unit costs, and amount. Units, unit costs, and amount. So this is called purchases or receipts. Actually, the correct word is receipts. And then here is issues. And then this one is balances. So if you have finished drawing, the question says the closing inventory counted on that 1st of July 2024 was 500 boxes. So that's the closing inventory. We are not given the opening stock. So if we had the opening stock, we would have put it here. But now here, we just begin with purchases. So the first one is February. On February 13th, on February 13th, 2024, we purchased 200 boxes at a total cost of 72,000. So tell me, 1 unit must then be how much? If the total cost is 72,000 for 200, 1 unit is how much? One unit is how much? $360. Yeah. So closing, yes, good. Elvis, that way. And Eric. Yes, Quinta, good. Yeah. So now the closing balance is 200 units at 360. The total amount is 72,000. Now draw a line here. Draw a line so that ufunge hiyo. Mine, I'm not drawing a line because I'll need to rub. I'll need to rub these figures to create space. So let's go to the next date. The next date or the next transaction happened on March 8th. So 8th of March, 2024, which was also a purchase of 400. It was a purchase of 400, giving us an amount of 152,000. So tell me how much that is. Tell me how much that is per unit. $380. Okay. So when you come now to close, you will close with this one, the 200 at 360, 72,000. Then this one that you have purchased 380 at 152,000. That's what I said you do. So hata hii tutafunga hivyo. Haya. We go to the next date. The next date is April 11th. But we have, we have March 10th. So 10th of March. Now 10th, we sold 500. So this is what happens. When you issue using last in, first out, you look at the two batches that you have. So this is what came first, followed by this. So your 500 that you want to issue, we will first of all give out these 400. So we give the 400 at 380. That gives us 152,000 that way. Then we need to give one more 100. So that 100 will come from here, 360. And that is 36,000. That is 6,000. So that now you are left with 100, 360, and we get that 6,000. That is what happened on that. So after that 10th, the next transaction is in April 11th. So 11th of April. Now 11th of April, what happened was a purchase of 600. And something you should have noted, when we have used these 500, hatujatumia the total sales value. The total sales value does not appear here. We use the costs. Sales value will come in when we are doing the income statement. When you are doing the income statement. Higher. So now I am on 11th of April. 11th of April, we bought 600 at the total is 240. The total is 240. So give me per unit. Per unit there ni ngapi? $400. Good. So when we come to close the day, we shall close with the 100 that ilikuwa imebaki jana or the previous time at 360. That is that 6,000. Then we have the units. The units are 600 at 400. And that gives us 240,000. 240,000. Higher. After 11th of April, the next earliest date is May 12th. May 12th. It is May 12th. So 12th of May 2024. And what happened here? On 12th of May, we purchased 400 at 140,000. So tell me, per unit here, ni ngapi? $350. So we have 100 here, 360. So that is 6,600 at 400, 240,000. Then 400 that we have bought at 350, 140,000. 140,000. That is what happened on 12th of May. The next is 20th of May, where we sold 600. 20th of May. So 20th of May, it is a sale of 600. So as we have said, because this is last in, first out, hii ndio tunatoa kwanza. Hii. So we get 400 at 350. That gives us 140,000. Then we get another 200 at 400. That will give us 80,000. The 200 is coming from here. Then with that now unafunga na hii, this 100 haijatoka at 360, that is 6,000. Then kwa hii 600, tukishatoa hii 200, tukishatoa hii 200, tumebakisha 400. At 400. That gives us 160,000. 160,000. $160,000. Okay. The next one, after 20th, the next one after 20th is July 15. July 15, we purchased 500. 15th of July, we brought in 500 at a total cost of 140,000. So tell me, good, 280. It's 280. So with that, tukikuja kufunga pale, tutafunga na hii 100 at 360. We have that 6,000. Then 400 at 400, we have 160,000. Then 500 at 280, we have 140,000. We have 140,000. Then the last transaction happened on July 25th, which was a sale of 400. July 25th, which was a sale of 400. So sasa hiyo tutaitoa kwa hii, this one. So with that, tutakuja hapa tuseme ni 400. Inatolewa at 280. Tell me 400 times 280 is what? 400 times 280 is what? 112,000. Yeah, 112,000. So our closing stock or our stock now will be this 100 at 360. That is that 6,000. Then kuna hii 400 at 400, 160,000. And then sasa hapa kumebaki 100 at 280. That gives us 28,000. 28,000. So that is all. That is all about that. Now this question did not have the what? The opening stock. It did not have the opening stock. Not have the opening stock. So below there now, you need some workings. You need some workings. You need some workings. So working one will be on purchases. Working 1 will be on purchases. So the purchases, what you do, you add those purchases, those values, the 72,000 plus 152,000 plus 240,000 plus 140,000 plus 140,000. So that is how you get the purchases. So add and give me the figure.
Unataka
744,000. Someone else to confirm? Yeah, good, confirmed. The next working that you require, working 2, is sales. So you do the same style. You do the same style whereby you take 250,000 plus 270,000 plus 152,000. $672,000. The last working that you require, working 3, is the closing stock. Now you can see here, for the closing stock, the units. If you wanted to know the units, you add these ones that we added with here. They were 100 plus 400 plus 100, so they are 600. They are 600, but the examiner had told us that they were 500. So if we were told there were 200, I mean there were 500, it means now this one is what is in the record. It is what is in the record. Then the units, we are told 500. This is the actual. That is the actual. That's the actual. So that tells you that we must have then some other units here of 600 minus 500, which is 100. And this one now we call it shortage. Shortage. So that is a shortage. So what we needed to do, I don't know whether you have space, is to come and adjust here. Is to come and adjust here if you have space, but if you don't, you can just adjust here and say shortages are recorded as an issue. Yeah, shortages are recorded as an issue. And therefore, thus, shortage in value will be this 100. The 100 now, because we are treating it as an issue, it will come from the last units, the last batch, this one, of 280. So we multiply by 280, and that gives us 28,000. 28,000. That gives us 28,000. So the actual, if we take now the units, already we have we have said the actual units are now that one. So the actual value now is this one, the 36,000. This one that we had here, this 36,000. Then this 160,000. Plus hapa tumebakisha so hakuna kitu tumebakisha. Hakuna kitu tumebakisha. I think zimeisha. Have I counted well? Yeah. So imetoka. Yeah. Iko sawa. So what is the correct cost? The amount? This one, 160 plus 36,000. 196,000. Yeah. 196,000. So after doing that, we now come and prepare the income statement. Now prepare the income statement. So the income statement, we start with sales. So sales, as per working one, we have 672,000. Then we say less opening stock. We did not have the opening stock, 0. Purchases are this one, 744. Closing stock tumepata the correct value now is 196,000. So that will give us the cost of sales. The cost of sales $548. So that gives us the gross profit. We less that to get the gross profit. $124,000. So we less shortages. There was a shortage of 28,000. Let me see whether we have another expense. Yes, we have operating expenses. Operating expenses. Operating expenses of 23,000. So with that, now we are able to say our net profit. Our net profit. 73,000. Yeah, so that is how you go about it. That's what you do. So are we okay at that point? If we are okay, say my yes. If not, you let me know. Yes, Eric. Yes, Elvis, good. So let's look for another question. Yes, let's go to August 2022. August 2022, question 1B. August 2022, question 1B, stores ledger using WACM. So we do have again the date. So on the side of receipts, we have units. We have unit costs. Then we have amount. Then we come to issues. We have units. We have unit costs. We have amount. We come to balances. We have units. We have unit costs. And we do have amount. Aha. Eric is saying he's unable to get. Elvis, have you gotten that question?
Yes, it's in page 50.
It's on page 50. Okay.
50 of 99. Yeah.
Yeah, 50 of 99. Yes. So Eric is on page 50 of 99. Tell me whether you have gotten it. Eric, umeipata? Okay, good. So have you finished drawing? Kama umemaliza kuchora, sema yes so that we move together. Kama umemaliza kuchora hiyo, sema yes. Okay, so we are done. We are through. So the question says, The following information relates to the store's receipts and issues of material in a small manufacturing enterprise for the month of April. So we have April, the opening inventory, all that. Then we are told it is the company's policy to use the weighted average method when valuing the materials used or issued. So this is what we shall do. We begin with the 1st of April. So all of them are in the month of April. So I can write April here. April 1st. We have 4,000 units. Each at 100. So that must be 400,000. And you close the day with the same 4,000 units at 100. So that gives you 400,000. That gives you 400,000. The next one, it happened on 4th. It happened on 4th. It happened on 4th. On 4th, we issued 3,000. So when you issue from here. So at 100, this is 300,000. So that we are left with 1,000 at 100, and that gives us 100,000. Higher. The next is on 5th. So on 5th, we purchased 9,000 at 120. So tell me 9,000 at 120 is how much? Then 8,000. So now, anytime when you are working with the weighted average, when you buy units, you must work with an average. Anytime you buy. So the average goes like this. Unachukua this unit 9 plus hizi zenye zilikuwa hapa. So you write 10,000. So we are not separating them like we did with the LIFO. So it is this, you add this. Then you do the same with the cost. This cost, 1080, you add to this one so that you get 1,180,000. Then now you divide this by this. Tell me how much that is. $118. Yes, that is how you get the average. The next date the next after 5th, we issued 3,200. That is on 9th. We issued 3,200. So you're issuing at 118. 118. So multiply and tell me what is the $377,600. Yeah. So now tell me, we are left with how many? 10,000 minus that 200. $6,800. So at 118. $802,400. So hiyo tunafunga. Then on 12th, we are told we returned to stores. So if you return to store, you return 2,000. A return inwards is treated as a purchase. A return inwards is treated as a purchase. And it is what we issued out on 4th. So it comes back at the cost at which it went out. It comes back at the cost at which it went out, which is 100. So this is 200,000. So this is like a new purchase. This is like a new purchase. So we have to do the average. So take these 2,000 You add these 6,000. That gives us 8,800. The 2,000, you add this one. That gives you 8,800. Then you take this cost here, this one, you add to this. That becomes 1,002,400. So after that, we purchased 4,800. That is on 15th. We purchased 4,800 and they came in at 130. So multiply, you tell me how much that is. Multiply. I'm waiting. What is the figure? 624,000. So this 624,000. So now when we go there, we need to get the average. So this 48 plus this one, it must be 13,200. Is it? No. 600. It is 600. Then you add this one. This 624, you add here. You get 1,626,400. So get the average. Send me the average. Send me the average. The average per unit. We can make it 120. Let's call it 120. When you call it 120, The next transaction is we returned on 18th. Now, when you return, it is taken as an issue. So we returned 400. So you take it at that cost of 120. So tell me what now is the cost, the amount, 400 times 120. $48,000. Then from here tumeachiwa 13,200 at 120. Tell me the amount. The amount. $15,84,000. Yeah, so from there, I propose that you will proceed on your own. You will be able to handle that to finish that question. In case you get stuck, you can let me know when we meet next time. But whatever tumebakisha, I believe is something that you can be able to handle. So thank you very much. Let's meet now in our next lesson. Let's meet in our next lesson.